Okay, thank you very much for joining us today. Just going to have a few bit of housekeeping rules to start with. First of all attendees are going to be on mute and will remain on mute for the whole webinar. Please use the question box if you do have any questions related to the topic of year end or anything in the demo. If we run out of time, we'll be answering questions directly, but otherwise we'll be answering them at the end of the demo. Please use the chat box for any questions related to the webinar. So for example, if you can't hear the audio or if the presenter is going too fast. And please note that a link to view the webinar recording will be sent to all attendees after the demo. Okay, so I'd like to introduce our webinar series, the 5 top things. This is a small amount of key points to focus on for various parts of the functionality within NAV. This will be the first of the series. You can sign up for one or some or all of them, and we will be sending emails out nearer to the time for each webinar to register. So my name is Karen, and I have been working at TVision for about 6 months now. I'm an account manager here, and my background is 17 years in the software account management, working for ERP companies. My colleague Nicola will be doing the demo today. She's our support manager, and she's been working at TVision for 14 years, 10 of those which were as a consultant. So here is the list of the top 5 areas of year-end that we're going to be concentrating on. We chose year-end as the first webinar, as many of you will be doing this now or within the next few months. Although year-end is part of the initial NAV training, it can be a long time afterwards when your actual year-end process takes place. So hopefully this webinar can be used as a refresher guide. So the top 5 things are reconciliations, chart of accounts review, adjustment entries, closure of revenue accounts, and the importance of the C date. We're going to be doing just a very quick poll just before we start the demo. This is just to give us an idea of how ready you are for year end. So if you wouldn't mind putting in your answer, that'll be great. Okay, has everybody been able to see the poll pop up, and have you been able to put in your answer? Okay, so I'm just going to share the results of the poll now, so you can see that 80% said they have new staff that needed to learn the process, and 20% are still unsure of what should be happening at this moment for year end. Okay, so I'm now going to hand over to my colleague Nicola, who'll go through the 5 key points. Just a quick reminder to use the question box if you do wish to ask any questions, and these will be answered after the demo.
All right, so one of the most common queries we are asked on the support desk is how to run year end, especially when you come to do your first year end after go live. So as Karen has mentioned, we'll run through our top 5 tips for running year end. Tip 1, reconciliations. So firstly, you should check that your control accounts, for example, sales ledger, purchase ledger, bank, inventory and VAT are not direct posting, which means you are unable to post directly to the GL without also posting to the ledger. So to do this, open up your chart of accounts, check that the direct posting flag is not ticked on inventory, sales ledger, bank, and also your others such as purchase ledger and VAT. Then run the various ledger reports, aged accounts receivable, aged accounts payable, and inventory valuation to check that these totals match the totals in the control accounts. You should also check your bank ledger entries and VAT ledger entries to make sure that these also balance to the GL. So, for example, to run your aged accounts receivable reports, open up the report. Aged as of is your year-end date. Aging by is posting date, so you can reconcile it back to your GL. Period length is fine at 1 month. I'm filtering on domestic customer posting group because the GL accounts are split by posting group. Then click on preview to view the report. And then make a note of the total figure under the balance column. Then you can go back to your chart of accounts, scroll down and find your sales ledger control account. Add in a limit total date filter to be up to and including your year-end date. And then check your net change figure, compare that to your report, and the figures should match. If there are any differences, you will need to investigate before going any further. Do the same with your other ledger reports. Tip 2, chart of accounts review. So you should check your chart of accounts to ensure that the indent chart of accounts functionality has been run. If new accounts have been created during the year, they may not already have been indented. And you should also check that accounts are correctly set to the balance sheet or income statement. So I'm going to scroll to the top because there's a new account created at the top. So click to indent chart of accounts. And then a message will pop up saying, you sure you want to do it? Then say yes, and that will indent any new accounts that you've created. Then you can check that all balance sheets are correctly set to balance sheet and your P&L accounts are set to income statement. If any aren't, then you will need to correct them before you run the year-end process. So tip 3, adjustment entries. Once your year-end accounts have been finalised, you can post any adjustment entries, for example, corporation tax adjustments, into NAV using a general journal. Tip 4, closure of revenue accounts. So this is in 2 parts. The first part is closing the fiscal year, and the second part is running the close income statement to move the P&L accounts into the balance sheet. It is recommended that you do this in a test environment first, especially if it's your first year end in the system. Before you close the year, check your accounting periods are correct, as once you've closed the year, you cannot change the year or month start and end dates. So to do this, go to Calendar Setup, click on Overview. In here, you will see your year and your months. So just check the period start and end dates are correct. If they are not, then change them before you close the year. Then close this down and go to years. And then in this screen, you'll see all the fiscal years that you've got created. If you need to create a new fiscal year, click on Create Fiscal Year. Before you close the year, you need to close any inventory periods that you've got open. So open up the inventory periods. If any open, click on it, click to close period, say yes to the message, and then close it down. So close down inventory periods. So the next thing you need to do is click on the year you want to close and then click to close year. Then say yes to the message and you'll see that the closed box is ticked. So once the year has been closed, you can run the close income statement. This is the routine that moves your P&L account balances into your retained earnings account in the balance sheet. Note that this routine can be run multiple times, so you can still post adjustments into a prior year after it has been run. So to close the income statement, click Close Income Statement. Fiscal year ending date, it'll put in your year ending date for you. Do it in your general journal, create a new year end batch for it. Enter whatever document number you want to. Make sure that your retained earnings account has been filled in. Change the posting description if you want to. Right, dimensions. If your P&L accounts have default dimensions, you will need to include those dimensions. If you don't select dimensions, the journal will be created with one line per GL account. If you do select the dimensions, the journal will be created for one line per GL account dimension combination. Then inventory period close, check that this is ticked. If not, you've got inventory periods that are open that you'll need to close first. Then click on OK to run the year-end routine. So this creates an unposted journal, so you will need to go to the journal to open it up and check it and then post it manually. So go to General Journals, open up the year-end batch, and you can see the journal in there. So the journal has been created with one line per GL account dimension combination. And it's also been created with a closing date, a C date, which is a fictitious date between the last day of the prior fiscal year and the first day of the new fiscal year. So we will learn more about this shortly. You can delete the journal and rerun the closing income statement routine as many times as you like, and then you can post it when you are happy with it. And then posting, and then say yes to the message. So once you've posted it, you can still post into a closed fiscal year, providing your allowable posting dates have been set up to cover this range. So just post the necessary general journals and rerun the close income statement routine again to move balances from retained earnings. You can then post the journal and rerun the routine as many times as you like. Tip 5, so this is the importance of the closing dates. So as mentioned, the closing date is a fictitious date between the last day of your old financial year and the first day of your new financial year. So you can run reports to include or exclude this date. So for example, the detailed trial balance report has the option to include or exclude closing dates. So if you open up the report, and then you can see the option includes closing entries. If that is ticked, it'll include the C date. If it's not ticked, it'll show you the P&L balances prior to the year-end routine. So another place you can see this is in the chart of accounts. So for example, the filter there is up to the 31st of December, and you can see that you've got a net change on your P&L accounts. If you change the filter to include the closing date and then scroll down to your P&L accounts, you will see that the net change is 0. So it shows you the figures after running year end. So that concludes our top 5 tips for running year end. Hopefully you found this useful. I will now pass you back to Karen.
Okay, thank you, Nicola. If you do have any questions about anything that Nicola has just shown, or anything about year end in general, or maybe an area of a year end that you haven't seen yet, you just like to use the question box, and we'll just wait for a couple of questions to come in. Okay, in the meantime, we do have one question which has come in. So, Nicola, if you wouldn't mind answering that one.
Yeah, right. So, question is, do users need to be out of the system when running the year-end routine? Well, they don't need to be out of the system as such. Ideally, we would recommend that you run the closing income statement routine out of office hours, just to minimize the impact of running the journal for users. All right, next question that's just come in. If there are any differences between the GL and the age debt report, how do we investigate? Good question. There is, if you look at your general ledger entries, on there, there's a field, which is a hidden field, called system created entry. So you can filter on it, even though you can't see it on the page. If you filter on system created entry equals yes, then those are the entries that should match to your age debt report. If you filter on system created entry equals no, then these are the entries that you've posted directly to the GL. So this should make the difference between your age debt and the sales ledger control accounts. All right, one other, I think this is the last one, unless we're going to get another one in. So how can we get an up-to-date test system? If you've got an IT department that can do this, then ask them to do it. If you want TVision to do it, we can do it. It's not covered by support, but we can do a refresh test database for you. Right, I think that's it for questions.
Okay, yep. So if there are any others which have come in, we'll answer them separately offline. Okay, so we'd like to leave you with 5 key takeaways from doing the year-end process that will allow you to use your results to improve upon future years. The first 2 points are to review the process and the results. So how easy did you find doing year-end, and how do you think these could be improved? How do your results compare to your goals, and was it easy to produce those KPIs, and what type of analysis did you use? So when it comes to looking at your strategy, where can you derive operational efficiencies? Are your current systems able to cope now, and are they scalable for the future? Do your key stakeholders have access to the relevant reports, and how easy is it for them to actually get hold of them? So once you have your strategy, then you need to decide what the desired end results will be for each of the company stakeholders, and how are you going to present and track these. Finally, you need to put together a plan to be able to achieve these results, and then decide what resource and what processes will be required. Okay, so we hope you found the webinar interesting and informative. As mentioned previously, this is the first in a monthly series of webinars, and we'll be sending out emails to register for the upcoming ones. We'll also put in reminders in the newsletters about the webinars as well. So thank you for attending, and if you do have any questions, feel free to email them to me at marketing@tvisiontech.co.uk. As mentioned, if there were any questions that came in before we stopped answering them, then we will get back to you directly offline. So thanks once again, and like I said, look out for the emails to you with the links to the webinar recording.